So Russ still overweight. So let's start there. You've got to explain to us why the bullish thesis is still intact.
Well, good morning, Jonathan. I think Lisa described it well a few moments ago, which is that you had this backup in rates, which has clearly dislocated the equity market, at least in the short term. But that backup contains both good and bad. The bad is obviously the sticky inflation. The good is an economy that is much, much stronger than anyone expected 3 or 6 months ago. And again, if you go back, let's say, to last summer, and you look at the consensus of Bloomberg economic forecasts, economists were expecting maybe the U.S. economy would grow about 0.5% in 2024. And obviously that reflected a lot of economists that still expected some recession probability. You go today, you look at those same numbers, growth is expected to be 2 to 2.5%. You layer on, let's call it maybe 2.5% inflation on top of that, you get to an environment where nominal growth for 24 is probably going to be in the ballpark of 5%. If you get that, you're going to get decent earnings growth, probably even better than is discounted right now in S&P estimates. And that's something that's a very different dynamic than last year. Remember, last year was all about multiple expansion. People paying more for a dollar of earnings. This year, we do think the equity market can go higher, but it's not likely to go higher on higher valuations. It's likely to go higher on better earnings.